relative to M2. Remember, we're saying M2 is starting to flatten out here. Gold relative to M2 really is as high as it's ever been, except for the Great Depression, when the money supply was collapsing, negative. It's no longer that now. And back then, gold was revalued. Or I should say devalued. It was a devaluation of the dollar in terms of gold. And that's why the spike back then. Now we don't have the first condition anymore. Money growth has turned positive. But we do have the second condition in terms of the dollar losing value relative to gold. And I think one of the bets that investors in gold are making is that the liquidity that spewed out during the COVID crisis is still going to find its way into inflation. We don't think so if money supply is topping out and velocity is rolling over. Now, I would like to give you, now that everybody thinks gold has only one way to go, if you look at the last two spikes there, meaning the last two other than the Depression, so the one in 1980 and the one a minor one in 2011. In 1980, gold peaked at $850. I was very young in my career, and I remember the day. And over the next 5 years, 4 to 5 years roughly, it dropped 67%. Why was that? It was because Reaganomics was working, and investors decided to focus on the equity market and the bond market instead of hedging, continuing to hedge against the inflation that had been debilitating during the 70s. Inflation came down and continued falling, and the dollar became very strong. The dollar became better than gold. It was appreciating as gold was going down.